Becky Swansberg, CEO here at Stonewood Financial. And I see a lot of new folks and some of our newer members on this call today. So first of all, I want to welcome you to the Stonewood community. And I'll tell you a little bit about the purpose of this call. Now, we all know that especially in election years like 2026, there's a lot that's going on. And one of the holes we kind of found in the broader community is that there are a lot of webinars and a lot of people talking about what's going on in Washington, but they're missing that link that connects what's happening in Washington to how do you leverage that information to help your clients make informed decisions in this environment. So the goals of these calls are always to give you actionable information that is kind of that connective tissue that's going to connect what is happening in Washington in the world of government and politics to help you drive decision-making behavior for your clients so that they can be prepared for what lies ahead. So this is a call as much about what is going on in Washington as it is about how do we help our clients use that knowledge to prepare for a better retirement. So for those of you that don't know, I'm now CEO of Stonewood Financial, but I actually got my career start in government and politics. So I worked in the White House under George W. Bush, and then on Capitol Hill for a couple different members of Congress and the Speaker of the House. And I will tell you, my time in Washington, those of you that have been around Stonewood have heard me say this. It was eye-opening how much the decisions made in our nation's capital have this direct impact on U.S. savers and their finances. And yet most people just aren't aware of the direct through lines. They see these big shifts happening in Washington, and they don't know what that means for them or how they can prepare and protect. So that is part of our role as financial professionals, is to help our clients connect those dots and plan and prepare. That is the other challenge, particularly in our part of this industry. As retirement advisors, we are helping our clients actually not navigate just the tax environment of today, but prepare for the tax environment 10, 20, 30, or 40 years down the road. So on these calls, I also like to always frame up what's happening today in planning senses. We are planning in the tax environment of today, but that planning has to prepare us for the tax environment of the future for our clients. So with that, we'll start with a 2026 outlook. Now, we have these Stonewood State of the Union calls kind of as they're needed throughout the year. I know this year we will have a couple of them because Washington will be Washington. We know stuff will be going on there. But right now, there are kind of two knowns that I think will anchor this year in terms of legislative and tax discussions. The first we are already in right now. 2026 tax filing season will be the first tax filing under the new Obbba rules. If you remember last year, Congress passed the One Big Beautiful Bill Act with a host of new tax provisions and deductions and different changes. Almost all of those, many of those provisions are retroactive. So it means they apply to the 2025 filing year, which of course all of our clients will be filing come here in April as we march towards April 15th. So one, we're going to have this Obbba tax filing season. Now, when Obbba was first passed, we heard a lot about it in the news, a lot of advisor marketing, a lot of client interest. That waned maybe a little bit over the holidays. I think it's going to really ramp up March and definitely April as tax filing season is upon us. And then I think Obbba will kind of take a secondary seat to the next big anchor of 2026, which is, of course, the midterm elections. We are marching headfirst into the midterms. As we know, there's often a change in party control in the House during the midterm elections, particularly in kind of political volatile times like today. So those, I think, are going to be our two known anchors of the year, and we'll see what else happens. So let's start by kind of picking both of those apart. Let's start with this Obbba tax filing season. When it comes to the work we are doing with our clients, now I know some of you on the call also have tax practices, but in terms of pure financial advising, two key provisions that I think are going to be the most important for us to be communicating with our clients around. The first is this new tax deduction for seniors age 65 plus. Now, why do I say that's first? It is, I think, the single most confusing portion of Obbba that has widespread impact on our clients. And it's just because of how it came to be. So if you remember, President Trump, one of his campaign promises was he wanted to eliminate the taxation of Social Security benefits. The challenge is the way that Obbba had to get passed through the Senate was through a process called reconciliation. Now, Social Security taxes, the taxes on your Social Security benefit, they don't actually go to the general fund. They are actually earmarked for the Social Security Trust Fund. And because of that, the reconciliation process did not allow Congress to eliminate them directly. So actually, I think what Congress did was a pretty inventive and smart idea. They said, okay, we can't directly eliminate the taxation of Social Security benefits. Instead, we'll just offer a new tax deduction for seniors age 65 plus, and we'll make that tax deduction broadly in line with what seniors are likely to pay in taxes on their Social Security benefits. So that is what actually passed. And I think it's important for our clients to understand they will still pay taxes on their Social Security benefit. However, those taxes could be offset by this new deduction. Now, the deduction is $6,000 per person, so $12,000 for a married couple, and then it does start to reduce at certain income levels, about $150 for a married couple, $75 for a single filer. But that does mean that a lot of our clients will get at least some portion of this new deduction. A couple important things about this deduction. Number one, you do not have to be on Social Security to get it. One of the nice things about the way this came to be through reconciliation is actually it's available to any senior American tax filer age 65 plus that it turns 65 in that tax filing year. So a lot of our clients, whether or not they've chosen to defer Social Security or take it, will be able to have the deduction. Number two, it is not permanent. This is a very limited time offer. It is only good through 2029. But that does mean in the near term, for the next couple of years, our clients will have a new deduction that they can either get fully or sometimes partially to lower their overall taxable income. That's a great thing. Okay, the second big piece of Obbba that we'll need to remind our clients about, probably we don't need to remind them about it, is that the One Big Beautiful Bill Act did permanently extend the Trump tax cuts. So if you remember in 2017, Congress passed the Tax Cuts and Jobs Act. It reduced tax bracket rates for many Americans, probably all of our clients and all of us on this call today. And those tax bracket rate reductions were not permanent. They were actually set to expire at the end of 2025. Obbba came in and extended them indefinitely into the future. Now, that means two things. Number one, taxes today are at a discount. Taxes today are being held artificially low, those bracket rates, by this legislation. But number two, even though Congress and Obbba made the tax bracket rate reductions permanent, it does not mean they will be around forever. A lot of people are surprised to learn that Congress actually has a very different dictionary than all of us use, right? When I talk about something being permanent, a permanent tattoo, permanent marker, it means it's there forever. When Congress makes something permanent, it means it will just be in place until a future Congress changes it. So while the lower tax bracket rates do not have a known expiration date, they will not last forever. Eventually, a Congress and a president will come and we will see those tax rates rise back up through legislation. And I say that because, you know, those of you that know me, I'm kind of a political geek and I love political history and presidential history. And if you go back and you look at low tax bracket rate environments going all the way back to the Kennedy tax cuts in the 60s, most low bracket environments last for an average of between maybe 6 and 12 years. And you know what? The more volatile politics are at the time, the shorter that window is. So we are in a time where the tax situation, the level of taxation, who should be taxed, what should be taxed, how much it should be taxed, it is far from stable and it is far from settled. So I do think over time and short term, we'll see those rates start to go up again. But that doesn't mean that it's not a great thing for our clients. So I think the key takeaways from Obbba in this tax filing season when it comes to messaging for your clients is really two things. The first thing is the era of the do-it-yourself Roth conversion is dead. If savers are not working with a financial professional like you who understands all the different factors that we're trying to balance to optimize a Roth conversion, they are not going to find success. Because coming out of Obbba, what we're trying to do is reduce IRMA fees and taxes long-term in retirement without paying too much tax or IRMA today, or without losing too much of those deductions to do it. So this isn't just a 1+1. There are a lot of pieces in this equation, and we need to help balance all of that for our clients. Now, here at Stonewood, I love our Roth Done Right software. We created it to do that. It's not just that you guys with access to that software can measure for your clients taxes and IRMA saved, taxes and IRMA spent. It's that page that shows you all the different conversion patterns to help optimize that in today's environment. So one of the first things we did after Obbba was made sure all the new deductions, everything was now in the software. And we're finding in the past, maybe a client would want to really speed up that conversion, take care of it in maybe 3 years. Now maybe they want to convert over 5 or 6 years to not lose too much of that new deduction. So a lot of moving parts. It's a great opportunity for you and your expertise to come into the conversation and show clients why, if they're trying to do any of this conversion stuff on their own or with the financial professional that doesn't know about all these levers, they're going to be leaving money on the table. And we want to optimize Roth conversions, but you need a professional that really understands taxes and IRMA and Obbba and all the deductions to do it. So that's takeaway number one. Communication message number two is actually kind of a broader message frame that I really think is important for us to understand as advisors, so we're communicating it appropriately to our clients. And that is that, look, we make decisions in the tax environment of today, but the decisions that we make are about the tax environment of the future. And I mentioned this at the jump of this call. As a retirement advisor, we are helping our clients prepare for the next 10, 20, 30, for some of our clients, even 40 years of tax policy in Washington. What we need to help them prepare for is just the change. We cannot predict where taxes will be 20 or 30 years from now, but we can leverage the tax environment of today, which is very optimal thanks to Obbba, to plan and prepare. And I like to say sometimes, as financial advisors at the core, we do not predict the future for our clients, right? Most of us would have a hard time if day in and day out, we had to go to the office and accurately predict 30 years into the future. But that's not what we do. We don't predict the future for our clients. We help our clients prepare for a future they can't predict. And I'll say that again. We are helping our clients prepare for a future they can't predict. And this is the number one takeaway from Obbba for me. We have this unique, maybe once in a generation opportunity at these lower bracket rates with these new deductions to reallocate the tax status of our clients' retirement assets to help prepare for all of those unpredictable futures. And this is really more of a holistic approach for your practice of elevating tax diversification to have the same kind of weight as market diversification and income diversification and all the other risks that you're helping your clients protect against. We don't know what the market will be 50 years from now, but we do know that our clients will be in a diversified portfolio so that they're protected if the market goes down. Exact same with taxes. This is a really unique environment to make sure we have helped our clients prepare for taxes in the future. Now, I and many experts fully expect that those taxes will be higher in the future than they are today. But regardless, the key risk is not exactly where rates will be. It is protecting against rates being somewhere that would be detrimental to our clients and their retirement approach. So it's really that delta, it's that change. I always say the number one thing driving legislative risk for our clients and tax risk for our clients is actually not who wins the next election. Believe it or not, that may have short-term impact. But long-term, the single biggest driver of legislative risk for our clients is just the fact that every 2 years we have elections. And every 2 years we get new government, which means what has been done can be undone. What has been undone can be redone. And I didn't even mean it this way, but on that note, let's perfectly dive into the second big anchor of 2026, the midterm elections. Now, anyone who knows even modern history knows that in a midterm election, the president's party tends to lose seats in the House and often the Senate. And quite honestly, as a nation, we like divided government. I think whether our voters realize it or not, we prefer to not have one party in charge of everything. And we see this in kind of the pattern of midterm elections. So George W. Bush's second term lost 30 seats, Republicans in the House. Obama, the Democrats lost 60 seats plus, actually think 63 seats during his midterm. Trump's first midterm, Republicans lost 40 seats. So we see wide swings, especially in the House. I suspect that will be true this year as well. Now, we are still many months out from the midterms. Lots of things could happen. They expected George W. Bush in his first election or first term to lose big in the midterms. And then we had 9/11, and they actually, Republicans did pick up some seats that election. But from where we stand today, most of the kind of preliminary polling suggests that Republicans have about 180, 190 safe seats, and maybe 208 if you count leans Republicans. Democrats, about 175, 176 safe seats, and a total of about 211 that right now are leaning Democrat. So if we take those leans, if things kind of trends continue where they are, Democrats will end up in control of the House. The Senate is a little friendlier to Republicans simply because not all the seats are up for election. Only a third of the Senate is up, and there are a lot of Republican kind of safe seats that tend to be up, happen to be up this election cycle. However, even just a big swing in the House to lose control, the number one thing that I think it's going to impact in our relationship with our clients and our conversation with our clients, obviously a lot of changes coming out of the midterm, but the one that matters as we're talking to our clients is just this return of tax volatility. You know, after Obbba was passed, I heard from a lot of savers and even some advisors that were like, hey, we've been telling people for so long, taxes are going up, taxes are going up, taxes are going up. And then Trump got elected. And what's the first big piece of legislation they passed? They actually keep taxes lower. Should we quit talking about Roths and quit talking about taxes going up? My answer, it will not surprise you, is no, absolutely not. Every 2 years, we have new government. When I look at long-term tax rates, they are not just tied to the political party in power. They are also tied to things like the size of our federal debt, currently over $38 trillion. They are tied to things like demographics and the fiscal pressures on Medicare and Social Security as our population ages. We currently have about $75 trillion of Social Security and Medicare benefits that we owe through the end of the century, above and beyond what current law can provide for. So even our annual deficit, which is running about $1.9 trillion a year, plays into that. So some of the things that will move taxes long-term are, of course, election-based, but many more of them are about demographics and current fiscal needs of the United States. So why do I say all that? Well, I think this midterm, especially if we see big swings in the House back to Democrat control, are just going to remind people that everything in Washington is temporary, right? The tax code is written in pencil, and it is going to be hard to maintain long-term these very saver-friendly, low tax rate environments because we know that the country needs more money. And I think nowhere is this more clear than on tariffs. You know, one of the big questions I got asked all the time last year was, Becky, you know, Trump has said that tariffs will eliminate the need to have all these new income taxes. And I'd say, yeah, if Trump and people like-minded to him stay committed to levels of tariffs that will replace income taxes forever. But that's not likely to happen. every election changes leadership and every election changes priorities. Whatever's done can be undone. Whatever's been undone can be redone. So I think the big thing coming out of the midterm elections will be a softening of this consumer confidence of savers that, wow, taxes are going to stay low for long. Because I guarantee you, Democrats get in and we start beating that exact same drum that we beat for 8 years of the Biden administration. We got to raise taxes. And who does the government want to generate taxes from? Our clients, wealthier Americans. It's interesting that almost 90% of all federal income tax revenue comes from savers generating $100,000 a year of income or more. So that is a lot of our clients are primarily the ones that can drive big shifts in tax revenue for the government. So those are kind of our anchors. We're going to have Obbba and this, hey, taxes are low. Now is the time to plan. Then we're going to have the midterm election. Hey, we really do need to plan because these low tax rates aren't going to be around forever. And in between those two messages is you. In between those two messages is I am the expert in our city, in our community, in my field that understands how to most optimally leverage today's tax environment to prepare for the tax environments in the future. Because let me tell you, once you're in retirement, deep into retirement, it's too late to make these adjustments. We have to make them now while taxes are low. And I think of it as like someone gifting you this, this beautiful, like juicy peach. And they're like, this is delicious. You should eat this now. If you want to get the full delicious benefit of that juicy peach, it's ripe today and we eat it today. We don't say, I'm going to push this off to the future and I'll eat it a few years down the road. It'll be rotten then and the opportunity's gone. That's what we have to help our clients understand, is that we have been given a gift through Obbba with lower tax environment, but it's a limited time gift. And only advisors like you that really understand all the levers that you have to balance, all the different factors that go into optimizing, converting the tax status of retirement assets in today's environment, only someone like you can guide them through this process without overpaying on taxes today or undersaving on taxes tomorrow. So that is really, I think, what I'll leave you with. The theme of this year is going to be really leverage today for tomorrow. It's going to be about, because we cannot predict where the tax environment will be 20 or 30 years down the road, we have to prepare today so that we are protected from those future changes. So here at Stonewood, we have rolled out so many tools to help you do this in the year ahead. First and foremost, of course, if you haven't had a chance to read our brand new book, The Road Less Taxed, How to Outsmart Washington and Take Control of Your Retirement. This is Neil and my newest book. This is a book that we wrote for your clients and prospects. The goal of this book is to help educate U.S. savers on the tax risk coming from Washington and why they need a professional like you to help them. So we wrote this book specifically with calls to action in mind so that clients and prospects will reach out and have conversations with you. This book, you can obviously order print copies at wholesale pricing. The most popular thing right now is our book customization program. So our book customization, for a one-time fee, we have a compliance-approved pre-written forward of this book, which gets attributed to you. So then your name is on the cover of the book, your picture and bio is on the back of the book, and your contact information is in the book. It is a great way to kind of leverage this thought leadership into your practice and really show that you are one of the leading thinkers about this new way to evaluate tax and legislative risk from Washington. We also have this digitally. So if you are doing email nurture campaigns or different drip campaigns to lists that you've built, that digital book is a great tool for that. So in the follow-up email to this, with the recording, I'll make sure to link to all of these new book resources. Really excited about that this year. Of course, the other big pieces are Roth Done Right and Legacy Done Right software that will help you on Roth Done Right optimize all of these different factors for your clients. And then on Legacy Done Right, for the portion of your clients' IRAs and 401ks that they're planning not to spend as income, but to pass on, it'll help you really seamlessly leverage life insurance to maximize those legacy values into this whole narrative of what's going on in Washington with taxes and Obbba and IRMA and it all. So great resources coming your way. As always, our team is here to help you. We are committed that as things happen in Washington, we will help you message it, we'll help you leverage it into meaningful client conversations that drive decision-making behavior. As always, reach out to me, reach out to the team if there's anything we can help you with. We are so appreciative that not just that you're Stonewood members, but that you are part of our advisor community, because everything that we create here at Stonewood, our software, our marketing materials, our tools like the retirement tax bill calculator, our books, they all come from the conversations you're having with clients. They come from members like you coming to us and saying, hey, I am losing sales because of XYZ. I'm running into this problem. My clients have this challenge. Stonewood, could you put your brain to work solving it? So we love hearing with you. Please share what you're excited about, what challenges you're facing in 2026. As always, our goal is to help make this year your practice's best year ever. Please let us know how we can do that. We're excited for the year ahead. And we'll see what crazy stuff happens in Washington. The great thing about DC, it's always given us something new to talk about. We'll keep you updated on what's happening ahead. All right, I hope everyone has a great afternoon. Thanks so much. Oh, and here comes the part where you realize I don't normally use this platform. Do I know how to end this for everyone? Here we go. End the session for all. Thanks, guys.